This is the Alternative Investing Advantage podcast from Advanta IRA, where we show you how to explore investments beyond Wall Street and open your eyes to new options for your portfolio. It's time to take control and give yourself the freedom to choose where you invest your money.
Hi, and welcome to another edition of the Alternative Investing Advantage podcast. As always, my name is Alex Perny, and today we're very pleased to welcome on Josh Moore with the NFN8 Group, the founder and CEO. And today we're going to be talking about a topic which certainly gets plenty of press, and which I encourage more and more people to really take a look at because, as time goes on, the exposure to cryptocurrencies, big things like Bitcoin, Ethereum, and the broader market of digital assets is something that really we should all take a look at and, try to see if it's, maybe look to get some exposure to it. This stuff is, here to stay. What it's going to look like in 5-10 years is anyone's guess, but it certainly is not going to go the way of the dodo. This is not a flash in the pan. It is real. It is entrenched. When you start to see big institutional players like Vanguard, Fidelity, and, other players start to try to integrate this stuff into their platforms and especially to the retirement plan side of things, it's time to, really take notice if you haven't. One thing that a lot of people are, just get overwhelmed on with, besides just, getting out there and buying it, they hear terms like mining and other things, and then they get the little, the little image in their head of someone going down in the mines with a pickaxe, which certainly isn't the case with this, when we talk about mining, but there's a lot of different places in the cryptocurrency vertical to invest. It's not just, kind of the more traditional aspect of what we're used to with securities or any other asset for that matter of just buy low, sell high, sometimes trade the arbitrage in between those price points. There's a lot more to it than that. And there is, kind of the suite of investments that people are used to in the traditional markets, right? There is synthetics, there are lending protocols, there is a lot of cool stuff out there. But one thing that kind of comes up a lot for people is mining, right? Who doesn't like the thought of being able to create value instead of just having to buy and play the the delta on price points. So that's kind of what we're going to get into here today. I'm really excited to dig into some of the things and the way that kind of people can invest into the mining side of things, right? So Josh, really appreciate you being on with us today. If you wouldn't mind, give us a bit of background about yourself, because prior to 2008, no one was involved in cryptocurrency, right? So tell us kind of how you kind of came to, be how NFN8 kind of came to market, and we'll go from there.
Yeah. Love it. I actually, as you know, Alex, I've been in the self-directed IRA space since 2004. I was one of the first guys who came out and did the IRA LLC offering checkbook control. And it's funny because that business back in those days is this legal? There were no custodians. There were just third-party administrators who, hooked up with smaller banks to actually, act as the custodian. And it kind of blew up in after the crash in 2008, 2009, 2010. I mean, those were some really good years for self-directed IRAs because everyone wanted to get off of Wall Street, get on the Main Street. Real estate was a big thing. Real estate was kind of all-time lows, and people were thinking I can lose my money on my own, And around that time, Bitcoin was born as well because people were sick of, the traditional type investments, having other people manage your money, over leverage and losing it. I had heard about Bitcoin in the early days and, 2013, 14, 15, but was kind of like everyone else. Who created it? What is it? It's some kind of nerdy, money, and people are starting a revolution. Didn't really think much of it. I've seen every deal in the sun. I've put deals together. A lot of real estate deals and tech plays and things like that. Just being in the space. And around 2017. My phone was blowing up with people who wanted checkbook IRAs for a brand new Roth IRA, right? And there's fees for that. There's custodian fees. They're starting a Roth IRA with, $5,000, and they're putting Bitcoin in their IRA. So I'm thinking, why would you do this? And really, just from a compliance perspective, I wanted to look more into Bitcoin, how it works, if there's any issues that are going to arise with IRA rules and code. And once I started doing that, I kind of fell in love with it immediately. It was directly in line with what I've already been doing for several years. Giving people control over their own future and now their own money. Peer-to-peer decentralized money that is global, can't be controlled by any governments, can't be impeded by banks. I just thought it was a really cool concept. So I started putting, actually in my garage, drove my wife crazy. I was putting together GPU rigs and mining like Ethereum and Monero and some altcoins, and really kind of, like I said, wanted to scale this thing, wanted to jump all in. So around 2018, I called some people, I had some investors, a lot of self-directed IRA guys I'd worked with in the past. Said, hey, I've got an idea. I have a little bit of experience, and if you take a rider on me, if you invest in this, help me make it much bigger, I'll make it worth your while, right? And we did that through an attractive sale-leaseback structure that provided cash flow to investors, which is what a lot of people are looking for through loans, real estate investments, oil deals, that type of thing, alternative investments. So we were off to the races. That's how I got involved, and we quickly scaled, because essentially the idea, I said, I'm gonna, investors are gonna buy these computers, and cover, electricity fees and CapEx and things like that. We were in co-locations in those days, but and I'm going to buy, some computers for myself too with the investments, because I don't pay for all these fees up front. They're covered over several years, electricity bills, that sort of thing. And year two, we're going to take our cash flows and buy more. Year three, we're going to take, if you look at just the concept of compounding interest, right, it can quickly grow. And put this model together, and basically the model showed that mining, with this doubling down on buying more miners, just had this hockey puck, and we were going to hit $20 million in 4 years. And a lot of people said I'm crazy. I'm just doing raw numbers, trying to use conservative numbers, and we actually, by year 4, we had doubled that. We'd proven the concept, over and over again. And Bitcoin mining is the backbone of what Bitcoin is. That's what makes it decentralized. That's what makes it, immutable. That's really, you can buy Bitcoin, you can watch it go up, you can watch it go down, you can have it on an exchange, you can have it on a hardware wallet. But when you send that transaction, it all goes through the miners. That transaction has to get verified, just like when you swipe your credit card, it has to get verified. It's just done through a decentralized network rather than a centralized network. And this decentralized network that anyone can participate in, just by essentially buying these computers that we call miners.
Gotcha. Yeah, no, it's always great to kind of hear, the genesis story of where people come from, especially in this space. I always kind of ask that to real estate investors as well, because it's very analogous. People, no one's one big, cryptocurrency hasn't been around long enough for people to have been in it since their entire careers, except maybe a few, small exceptions. But always great to kind of hear where people came from. And to your example of people that wanted to do checkbook control IRAs back in 2010 when Bitcoin, I looked it up when you were talking 80 cents a coin.
Yeah.
I really hope they didn't sell, because that would be definitely a pretty awesome story to tell. But doubtful many of those people held. But hey, if they did, that is awesome. I love hearing stories like that.
Yeah, yeah.
So, again, you kind of start to get into investing, and when I guess what was really kind of the catalyst moment, right? I mean, I'm assuming you probably, were buying some cryptocurrencies and getting into the space of saying, okay, like I see this as an asset. But was there like a light bulb moment where you were like, from the mining perspective, where you were like, this is really where, we can make some inroads? Was it lack of competition in the marketplace? Was it just the fact that you saw better, probabilities of return by saying, look, if we can focus on the hardware and the mining aspect, it's just going to be a better play. But I'm assuming there's probably some components there that really drew you into the mining sector.
Well, so the idea that if this if this can work, it looks really good. Like I said, I've seen and done a lot of put a lot of deals together, and didn't really haven't really seen anything as attractive. When you look at the numbers, obviously it's volatile, so you've got to build that into your models. But there is there's a formula which I can cover later, but it's not all about the value of Bitcoin. So there are some concepts, or some it's a protocol, right? So there's software built into the protocol that if the global hash rate gets bigger and bigger, then mining gets more difficult. So I guess what really when kind of the light bulb went off was when I saw that it worked. And it was, I always say we make it look easy, but it ain't easy, But if you think of, you buy a computer and you put it in a co-location, you ink a deal with that co-location, you know what your expenses are, which are mainly around the cost of electricity, and kind of the metrics on what that computer is going to make. I mean, these are money printers, right? So give me an example. Next gen miners that we're putting in place these days, you mine a Bitcoin at about $50,000, so a little lower than that. And so if I were to tell you, hey, I've got a money printer that prints that prints $1 for 50 cents, what's the question? How can I buy more money printers? you know, and there's a lot of hobby miners out there. It's become a little institutionalized these days. But back in the day, kind of the Wild West, if you will, there's a lot of hobby miners who wanted to play with their rigs and see if they get them more efficient and all that stuff. And we love hobby miners, but I was looking at it from a financial model, and return on investment at the end of the day.
Yeah, that's right. And that's where, a lot of these things, that people I don't think really realize on kind of how this works. Because you think, even if you kind of just scratch the surface at mining, people more often than not think, okay, well, you look at what is a mining rig cost to buy, and then, okay, well, how much is my electricity? And doing it yourself seems problematic from a price point perspective. Now, again, when you plug in with a provider, again, that can do it at scale and also knows how to string these things together, it starts to make a lot more sense.
Right.
And I do remember the days back, I used to be a lot more into, building computers, and man, I couldn't tell you how frustrating I was with the whole mining community that I could never buy a graphics card.
Yeah. Yeah.
And then if you
Yeah.
managed to get your hands on a 1080 Ti back then, you were had like gold in your hands. So it was a little frustrating for us, some of us hobbyists that had to run adjacent to the crypto community at that point. But
Right.
no hard feelings. I can't blame anyone for making money, although trying to play my video games was a little bit problematic. So,
Yeah.
know,
Believe me, I got a lot of hate in those days too. What was that? Like 2019 when it
yeah.
really, and those are Ethereum miners. And we decided really to go heavy on Bitcoin because a lot of these altcoins, I mean, there's, thousands of derivatives of it. It all started with Bitcoin, right? Which if you were the first guy in and you got that powerful, supercomputer, if you will, then you could make a 3-month ROI. But in 6 months, when everyone had one in their hands, and the competition, the global mining network became much larger, then that thing's a paperweight. And when you're planning to literally invest millions and millions of dollars, you want something that's going to last. You want the gold standard. And you can't really do that with GPU rigs. You do it with what's called ASICs. These are application-specific integrated circuits, which essentially means you can't play a video game with these computers. You can't render AI. You can't send emails. They run one hash function, one algorithm, and they do that very well and very fast.
Yeah.
And it's Bitcoin that mines on the Bitcoin algorithm. There's other coins that you could switch to, but yeah, I decided early on not to get into the GPU rigs. None of them ran the same. You always had to mess with them. There was a lot of OpEx involved. And also, when there was a time where we decided it was just so hard to get these miners. The market was so hot. Everything was so expensive. The lead times were long. And this at this time, this is like 2020, we had a lot of connections with some of the largest data center hosting facilities, the ASIC manufacturers, and we got a little better lead times, a little better prices, that sort of thing than anyone just off the street. I want to get into mining, but we're like, we need to, we're thinking about mining Ethereum, but there was this idea going around the internet of changing the Ethereum algo to not be mineable, but more of you mine by just holding, which is it's a good concept, but it's a different concept. And that fork would have made Ethereum mining obsolete. There was no Ethereum mining. And I saw a data center. I mean, this was literally $750 million filled with these GPU rigs. And we were going over the numbers like, these make 2 pennies a day. And this is a huge data center. And they're obviously switching to Bitcoin miners after the fork. And it's like, man, you guys are making hundreds of dollars.
Yeah, it's funny. And especially, again, with that switch for hardware, I'm assuming, again, from the perspective of one, nothing that you're buying at a, good enough price point, being consumer grade, not enterprise grade, would make really much sense. I mean, you get into enterprise graphic processors and the price point is astronomically high when you start looking at some of those things, whereas ASICs can, again, be, specifically built for doing one thing and one thing only, right? All it needs to do is just do that math problem and do it very fast. So again, that concept is, again, something that, for maybe the more, again, plugged in person that hasn't kind of made the leap into the space, hears and sees just a bunch of the, news that's out there, doesn't really kind of get the whole picture of kind of how this stuff works, right? The mining community really has matured to a point where now we have dedicated hardware, right? We have, supply chains and stuff that are being tooled up and built specifically to do this stuff and to do it extremely well, right? So when that happens, when you have that economy of scale, it drives the hardware costs down because now you have something specific and you're not competing with other industries for the exact same commodity, right? You're not competing with a data center that needs to do graphic rendering and then also has a bunch of people trying to snag these enterprise GPUs off. The only people you're competing with are people in your industry. So again, your competition pool narrows, your hardware cost narrows, so your cost basis goes down across the board for it. So now you're not necessarily so dependent on the price point inflection between, what your all-in cost is here and what the actual asset cost of your mining is, which again makes for a healthier and a lot more stable of an environment when you have some of those other factors that kind of get weeded out. Which again is something I find nice about where we're going with this, right? Because for a while there, I kind of was thinking, from what I'm seeing, I was like, I don't really see a whole lot of specific stuff that's done on scale, right? The ASICs seem to be a little bit more bespoke. You didn't really have a whole lot of people kind of looking at it seriously. And now we really do kind of have that economy of scale behind these types of hardware platforms that can allow for stuff like what you're doing. Is that a fair enough assumption?
Oh yeah, absolutely. And it's funny because everything in the media for many years as we're kind of growing this stuff out was all negative. Even, Bitcoin goes up. Oh, it's a bubble. It goes up, 30%. It's a bubble. It goes down 5%. The bubble popped. Like
Yeah.
I've heard that every halving cycle. And it's only for hackers. It's only for drug dealers. It's only for, so there's a lot of negative press. And then BlackRock comes out with an ETF.
Yeah.
And now it's all positive. It's institutional. People, I mean, they say now you can hold it in your retirement account. And I'm like, you could have all along.
It's like I'm sitting over here going, I've been doing this for clients for years.
Right.
What's going on? Yeah, and again, to that point, again, I think it's people start to realize this stuff. I mean, heck, even one of my precious metal brokers that I deal with personally will take my Bitcoin. I can scrape my profits and buy precious metals with it. If that isn't an indication of adoption on a big scale that you really need to be looking at, I don't know what else to tell you, right? BlackRock and coin dealers are taking Bitcoin. Let's take a listen. And let's start digging into this, right? So, from the point of view of understanding kind of again how this works, right? Let's just do a real like quick and dirty. I'm talking quick on people understanding what exactly mining is. Because again, people are thinking little helmets, lights, not the case. Like this is a large computer math problem that is being done first to finish. So just kind of lay the groundwork a little bit for people to understand mining. And then we're going to get directly into how you actually kind of structure these things in the verticals that you're working at.
Right. Okay. Well, so again, Bitcoin is a software. It's a protocol, and that has rules that are in place, and there will only ever be 21 million Bitcoins. So there's a finite.
Scarcity.
Right. Exactly. It's the opposite of inflation, because it gets. Bitcoins that are put into circulation get cut in half every 4 years, roughly. So I guess an easy explanation is when you swipe your credit card, it's got to get verified. It's got to go through a network. It's got to go through computers, algorithms that can verify a ledger and make sure, you have the money in your account. And that gets done very quickly because of technology. And Bitcoin is the exact same thing. Well, not the exact same thing, but same concept, if you will. But like I said, it's anyone can participate by running these computers, running these hash functions. And the way I like to explain it is, imagine you've got a Rubik's cube, and you want to solve this Rubik's cube. People who do it really fast. I think I saw a video where a computer did it or a robot did it in a fraction of a second.
That's how that works. It was crazy.
You use an algorithm to solve this Rubik's cube really fast, and that once the Rubik's cube is solved, if you will, it adds another block to the ledger. It's called the blockchain. And but the genius of this is the more the people that are trying to solve this Rubik's cube, the more complicated it gets, right? Mm-hmm. So that you don't mine all the Bitcoin in 10 minutes with a supercomputer. I think that's kind of the most simplest way I can explain it. You send a Bitcoin, someone receives a Bitcoin, and it doesn't go through your bank or a Visa or anything who can decline it if you have it. It goes through a global network.
Yep. Every time that Rubik's cube gets solved, another cube gets put in, and then you got to figure out how to solve that, and then it's just on and on it goes. You get paid for being across that finish line first and verify that stuff.
The miners, just so we're clear, the way they get paid is those mining rewards. Whoever solves the Rubik's cube gets the mining rewards. It started in 2009. Those rewards were 50 Bitcoins. So if you solve the equation using these hash functions, math equations, then you got 50 Bitcoin. And it gets cut in half every 4 years, like I said. So 4 years later, it was 25, and it's been cut in half, so many times, and now that block reward is 3.125 Bitcoin. So what we do these days is we pool together in a large pool of miners who share And this is how you get daily rewards and not just, I hope I solve this cube. Do I have enough processing power? So those the way we're rewarded is primarily in those blocks that are unlocked in the in the chain, if you will, and they're spit out every 10 minutes.
Okay, cool. So now that we kind of have the basics of that, right? I think, now the next kind of thought for people is, okay, well, great. So you set up this, bespoke kind of thing, and then you plug it into the wall. I don't know how to do that. Let's connect with someone that can actually do that. So, there's a few different ways that all these things can kind of be done. And I've interviewed, I think, 2 other people on cryptocurrency, digital asset. More specifically, most all of them are focusing on, when they're doing it at scale, focusing on Bitcoin. And I'm assuming that's probably a function of Bitcoin's price, right? This stuff is not free to tool up. And if you're doing it on an Ethereum network where the rewards are, unitized in several $1,000 units as opposed to $100,000 units, the economics just scale way better with Bitcoin, right?
Yeah, I mean, I would agree, but kind of the way we look at it, and different investors, different companies look at it differently. I've seen companies who say, I just want to get as many of those 21 million Bitcoins that I can possibly get in my hands, and I want to hold them for as long as I can because Bitcoin's going to $1 million. I like to look at it more of a cash flow perspective. I buy a miner, right, for $5,000, if you will. And this miner can make me between, whatever, $3,000 and $10,000 a year. So that's a good ROI. And what you're in the old days, yeah, you'd plug it into your wall, and then it's like, how do I get more of these? And then you start doing, well, I need to put these in an actual data center because my garage is getting really hot. My breakers are flipping,
Oh, yeah.
all that stuff. But again, we kind of look at it as what is the revenue on a volatile, commodity. What does it spit out in Bitcoin? What's the value of Bitcoin? And then, again, there's a formula that it gets a little complicated. It's, Bitcoin rewards at 3.125 times how many rewards a day, which is, every 10 minutes is 144 times the value of Bitcoin over the global hash rate. And that is something institutions and companies like myself are growing that global hash rate by building data centers and putting more miners in. And the simple way is that equation spits out a revenue per terahash, right? So every, and these machines are like, 200 terahash units, 400 terahash units. So you just multiply the daily revenue per terahash by how many terahash you have. And that's kind of the easiest way to look at it. And you have expenses, you have OpEx, you have electricity fees, you have, if you want to keep growing, you've got CapEx in a business model. So you kind of need to look at all those things and in a cash flow way. Those things cost money. I can't just hold Bitcoin forever. I've got to liquidate at least a fraction of it to pay these bills and pay these expenses.
Yeah, and until Duke Energy starts taking Bitcoin as payment, that's kind of the world we're in. So,
Yeah.
where I think the interesting thing to kind of explore next, right, is you mentioned some stuff I think people can really resonate with, right? The mechanism to which these things actually produce rewards and actually produce the Bitcoin, right, is something that, again, a whole podcast in and of itself would be well maybe in 2 parts. But suffice to say, right, these machines, these algorithms produce an asset, right? If you mine something, if you go and dig something out of the ground, you pay people and you pull out gold, you refine it, now you have gold. The same kind of concept works here. The math and everything works out. Now you have this Bitcoin. Or these rewards that are being paid out. Now, from the business model side, again, people are going to be coming in and investing in this with fiat US dollars or whatever else they want to. But the concept right here is saying, okay, well, how do we kind of scale this, right? You have all of these other kind of expenses between real estate, real estate taxes, data centers, electricity, doing this stuff, the capital side of doing this, right? The operational expense that goes into it. So how do you kind of operate in that? Because there's a lot of different ways to play this out, right? If you're going to be going into a data center and renting space and renting bandwidth, that's one way to do it. Or are you looking at more of saying, okay, we're going to build our own standalone centers. We're going to tool them up with electricity and then do this ourselves so we control that vertical. Has it been something where it's been the same over time that you've kind of focused in on one model versus the other, or have you kind of changed over time as the market has changed?
Yeah, yeah. Well, and that's a good question. And in the early days, it was relatively simple. I buy a computer, I hook up with a data center, and ink a good deal on hosting fees. I put that computer on their rack, and they manage everything. So all I needed to do really was look at the model, the cost of these money printers, the cost of a computer, the fluctuation of daily, revenue per terahash, electricity bills, hosting fees, that sort of thing. And things when it became institutionalized, because it's funny, we were the third customer in a very large data center, and this was in 2019. They had this AI play, and they're run by the ex-CEO of Microsoft, and that was it seemed like their model was to get acquired by Microsoft on their AI stuff, and which they little ahead of the game, but then since they were building these data centers, a lot of Bitcoin miners showed up, and eventually you would show up at their site, and their AI would be, I mean, it's massive, it's 5 megawatts, but their Bitcoin miners were 100 megawatts, so it's all Bitcoin mining. And eventually, they decided we want to mine Bitcoin. Our customers are making all the money. We're doing all the heavy lifting, which makes a lot of sense. And data center space, hosting, I mean, they caught on. And just like same thing with energy guys. A lot of these energy conferences have kind of turned into Bitcoin conferences. Smart players understand where the demand is, and hey, maybe I should be doing this. How does this work? And then all of a sudden they get into Bitcoin. And we also we looked at kind of, all right, what's the capex, and we could save money on OpEx. We could save money on electricity. We could become more vertically integrated, and decided to just start building our own data centers. So nowadays we don't just rent rack space. We actually, put capex in the model. We put OpEx in the model. We go to places with very favorable electricity rates, which there's ways to manage that, and there's benefits for the grid. So we're sort of acting as a battery for the grid in a lot of ways. It's not just, oh, these Bitcoin miners are sucking all the power out. There's a huge benefit for Bitcoin miners. And when I kind of ran the numbers on that, the capex had relatively the same return in savings as just buying a computer and sticking it on a rack.
Yeah.
So I think that's definitely made our company. We're not just out there buying a computer and getting a commodity and kind of beholden to these mega data centers that may not want us there after our contract expires.
Yeah.
Yeah,
Absolutely. And I would also imagine too, I mean, not that it necessarily is exposure to, the client or the investor per se, but especially going into, building and owning real estate too, it probably offers a lot of other, nice things with regard to, depreciation schedules, not just on the hardware that you're running, but also on buildings, which can help it again offset some of those costs, especially when you have things that are going to be can be very volatile from a cost perspective, right? It's tough, especially in today's geopolitical climate for silicon manufacturers, right? We don't know what's necessarily going to go on in Southeast Asia. There's a lot of tumult about that, especially again with tariff policies in the United States, not to mention, external geopolitics on what's going to happen where a lot of these things are made. Also, energy production, right? There's a lot of things that can be, very uncertain with some of the stuff. So again, I would imagine having some of that certainty is probably a nice factor. And again, a lot more, the more vertical you can make a lot of this stuff, the better from most perspectives. Now, you bring up a kind of a few interesting points here is that you go from tooling the stuff up in the data center to kind of building stuff out on your own. So what kind of how what's kind of that process look like? Because I'd imagine significantly different. Like you have this whole other segment that you have to look at. Before it's just talking to the enterprise tech guys that run the data center and be like, all right, cool, it's going to get delivered. Here's the tool up schematics. Let us know when it's online. Right. And now it's okay, cool. Well, when's the concrete guy going to get here? When's the lineman going to get here to run our substation?
Yeah.
What are some kind of ways that you have operated in that space to kind of make this as efficient as possible?
Yeah. So when we started, building our own data centers, we were kind of scouring the earth looking for the right spot, the right sort of type of building that we could retrofit and modify to run these computers very effectively, efficiently, and feasibly. And it was a little hard to to find some of those, but we ended up getting some, and we always want the latest tech, but over time, so we went with a large building that gets heat out of the building very efficiently, because your traditional like tier 3 data center that runs these crack units and these air conditionings, there's a cost to those air conditionings, and those can double your price in electricity, and now your ROI just goes down. So there's specific type setups to run a Bitcoin mine, but I really was looking for sort of a rinse and repeat. I would rather find low cost of power. Like I'll give you an example. A utility company set up for a farmer a 10 megawatt infrastructure substation, and the farmer uses 2 megawatts seasonally. So he's not, there's a huge cost of building that infrastructure, and they're not really they're getting a 20-year ROI or something ridiculous. So we show up and say, I can utilize the rest of your power capacity. You can sell me energy, which is what you want to do, and we can essentially make energy cheaper for all your customers. So they love us. And how do I do that? Follow the lines and look for these substations and kind of low-hanging fruit, if you will, for massive scale. And what we're doing now is getting into these type of setups that are immersion. And it's like you think of liquid cooled, where the climate and the dust. I mean, you could set these things up in a cornfield in Iowa, and a lot of the construction is electrical. Of course, laying slab, plumbing, that sort of thing. But it's funny because we have investors going, "You're going to put this up in what?" Like 1 to 2 months, and looking at acting like we're building a new residential property or something, and picking all the plumbing and countertops and all the logistics that goes into that. I mean, so I think we really do. We've definitely been through some learning curves, but have sort of a rinse and repeat model that we can
That's
put in.
awesome.
Yeah.
And how do you kind of, I'm assuming that the returns that get paid out of the, rewards and everything, again, that formula does take into account, your OpEx, right? What your expenses are from an operational standpoint. And again, you can kind of control some of that again with building it yourself. You don't have to worry about them raising up your rack space, right? Or if they're doing like a net average of consumption for electricity, that, someone else isn't jacking up your prices to that effect as well, like you were talking about. But one thing I think is still kind of a big factor in that is electricity cost, right? It's
Yeah.
that's kind of the key in this, and they go kind of all over the place. So how do you kind of try to mitigate that? Is it something where you just basically look mainly for the location and then either tool up or tool down if you have big price swings, or is it something else I'm not kind of hitting on? But I would assume, from my thought process, that would be kind of the big elephant in the room, is trying to mitigate the consumptive power source, to make sure that it's not just operating at a net wash for what you're doing.
Sure. Yeah, and you're absolutely correct. There's, of course, there's OpEx, there's manpower, there's security, things like that, but they're really low cost in the grand scheme of things. And the main cost is the electricity. If you're in your garage paying 12 cents for electricity, you're not gonna make money, unless Bitcoin just goes through the roof, and you'll make money for a little bit. But so yeah, we want to manage those costs by essentially finding the right utility companies, finding the right substations. Different areas are a little different. Texas is kind of a free market on ERCOT, but there's a lot of programs you can sign up for, where you get paid just for saying, hey, you can call on me if we have a winter storm and people are without heat, that sort of thing. And then there's cooperatives that we work with where we just ink long-term deals with low cost, usually sub 5 cents, some sub 4 cents of electricity. And when those costs are set, that's your expenses. And if your revenue, could be here or could be here, and that's with the Bitcoin volatility. And so it's, you kind of, the way I look at it is, let me look in the past and the history on that, revenue per terahash. Let me look at worst case scenarios, and would I ever be underwater in these scenarios? And
Sure.
If the answer is no, you don't do it. If the answer is yes.
Yeah, absolutely.
Yeah.
And again, to kind of bring this into the back end of it, we've talked about a lot of, great content on, what this actually looks like how this stuff actually plays out to, what an ultimate return is. But what we haven't kind of covered is looking at this from the perspective of the investor and saying, okay, great, now I understand kind of what is going to go on, right? But, if this is something where I have to come in to buy a Bitcoin miner, it's going to cost me $100,000. Like, how is this, like, from the investor's point of view, like, how are these things kind of unitized out, right? What is what does the actual investment structure look like if someone's coming to invest in this? Is it a purchase and lease back? Is it simply just leasing, bandwidth space and you're tooling these things up? I think it's kind of important for people to understand, one, the macro of how all this stuff works behind it, but then also the micro of, when I give you money, what exactly am I acquiring, right? Is it actually buying the box and leasing it back? Because there's a few different models that people operate. So specifically for your operations, how do you work that?
Well, so we do it in a couple ways. We have, these to put one up and fill it. It's like $3.5 million, right? So, and we're constantly buying miners, constantly building out new facilities. And also, let me make a point. If you're mining Bitcoin in an IRA, I've seen two legal opinion letters. One say there's going to be UBIT tax, and one said there's not. But one way to make that solid is to create a security that someone buys, in their IRA or outside of their IRA, that is a Bitcoin mining security. So we've done that through a sale-leaseback program. And these obviously are for accredited investors, sophisticated investors. And the way that program works, that's how we essentially bootstrapped our whole business, was off of our sale-leaseback program. Is someone buys this computer and I lease this computer from them. So they're getting a consistent revenue stream, monthly payments, just on, if I'm making a little more than I'm paying out, doesn't matter to them. If I'm making a lot more than they're paying out, good for me. right? And another way that we do it is for larger scale investors, is we structure sort of this this JV rev share deal where they roll with us, and just raw numbers. If you build and fill one, these days it's around 40% to I've seen 120% ROI years, and that's a big spread, right? But 40% return on investment is not bad it just costs billions of dollars to do it. So our sale-leaseback program is just for our internal growth, and then we have partnership programs where partners can roll with us and have a lot more upside.
Yeah, I think that's really important for people to understand is that we've covered quite a bit of stuff here. Some people that might really understand it with operational expenses and things that they might have been clued into, to also kind of how this stuff works, and then also how you can actually get plugged in to do these things and the options that are there for you to invest with Bitcoin mining, especially in the structure that you do it, which I find very valuable for people to understand, is saying, okay, let's try to demystify this a little bit and show, when you hear about this stuff on the news, here's how you can actually invest in it, right? The news always likes to say like, hey, like people invested in X, Y, and Z, and some of it are like, how do you even do that? But again, that's one thing I really aim for here on the show, is to shed light on new, interesting, and alternative ways of looking at investing in finance. So again, really appreciate you being on with us today. Are there any final thoughts that you want to impart with people, and also how can they best get in touch with you?
Yeah. So, our company is NFN8 Group. Our website is NFN8.com. And, we have a phone number there. They can get in touch with us. They can talk to myself, Josh, just ask for Josh Moore. And, love working with investors. Obviously I love what I do. I love, growing our projects, growing our team, and, creating a win-win-win scenario. Right. We allow people to get involved with very little knowledge of how all this works. Right. If you jump in and say, I want to get into Bitcoin mining, there are a lot of learning curves. Believe me, there's a lot of learning curves you can go through, especially if you're getting into the data center build, and what manufacturers of computers to work with, what hosting facilities to work with. So there are some people who say, hey, buy a computer that's already running, and it goes to your Bitcoin wallet. It's just those turnkey programs and pricing. They work in some environments, they don't work in some environments, right? You could be underwater. So I think we've created some really good programs where people can get involved, investors can get involved, and we can make it very simple for them, and while at the same time be very transparent, so they can learn how all this works.
Absolutely, that's what we always aim for, is to help shed some light on how these things work, especially on the more esoteric end of the spectrum in investing. So, Josh, really appreciate you being on with us today. The most valuable asset we all have is our time, because no matter what we do with it, we can't make any more of it. So really appreciate you being on with us today. This has been another edition of the Alternative Investing Advantage podcast. My name is Alex Perny, and we'll see you on the next one.
Thank you for tuning in to the Alternative Investing Advantage podcast. Tune in next week for more investing tips and strategies.
Want to hear more episodes of the Alternative Investing Advantage? Search podcast at advantaira.com and subscribe.